Okay, today we are looking at the Central Miami Industrial Submarket, where we have 224 properties. We have currently 13 properties that are actively for sale, 3 that have closed in the last 3 months, 7 that are actively for lease, and 3 that have been signed in the last 3 months. This particular submarket runs along the I-95 corridor from the 195 to just south of the Golden Glades interchange. As far as the lease rates, we're at $20.26 a square foot. That is up slightly from where it was, a little less than 3%. While you can see the jagged line, the trend line itself for the asking rents are just below the market rents themselves. The expectation is that we're probably going to see those not climb quite as fast throughout the third quarter, and then somewhere along there, they're going to start increasing again. So we can expect rents to start going back up again. As far as time on the market, we know that right now we're probably at about 8 to 9 months on the trend line. This is funny because this particular submarket has one of the highest times on the market. Some of the other markets are somewhere between 4 to 6 months on the market. As far as dollar per square foot, this is also one of the submarkets where we're seeing pricing. It has gone down 1% from where it was last year. Again, just an interesting fact that it has gone down. We saw the last 5 years where we saw some really significant growth in the area. The expectation is that that pricing is going to hold firm for, again, throughout the third quarter. Once we get through the third quarter, then we can expect it to start going back up. This is the first opportunity for anybody that is looking to get into a property, whether you're coming out of a long-term lease or you are just expanding your business and you need some additional space. Reach out to us before prices start to go back up again, which is again somewhere between now and the fourth quarter. Their expectation that they're going to start climbing again. As far as properties that perform the best, we can see that the newer, larger stuff is the one that has the highest dollar per square foot in that particular submarket. As far as the cap rates are at 6.5, and this is again one of the submarkets where it has actually gone up versus being flat or going down. We've seen a 0.5% interest rate increase on the cap rate. So the cap rates themselves are expected to go up a little bit more and then start turning down. And again, all of this is going to take place somewhere between the third and the fourth quarter. So again, if you are thinking of getting in there, get in there before those prices start going down. On the distribution, we're somewhere between 4 and 9%. The bulk of it is between 7 and 8%. So there were definitely some good trades to be made in that area. As far as the best performing cap rates by star, those were the middle properties, the blue line, which was up slightly above the smaller stuff. So the mid-sized properties were probably the ones that performed the best. As far as properties that were on the market, this market actually has more properties that were actively on the market than what was actually, or all the properties that sold were on the market. 12 sold, 13 were on the market. So if you are thinking of selling your property, reach out to us. We can help you with a market analysis and show you exactly what your property is worth and what's the best way to get the most for your property.